I would now like to welcome to the stage Debbie Fullerton of Westgold Resources. Welcome, Debbie. Debbie's the CEO of Westgold Resources. She has over 30 years' experience in the resources sector as a mining executive and chartered accountant. She was formerly a director of RNI Limited and remains a non-executive director of Gateway Mining and De Beers Australian Exploration. She was CFO of RNI in 2015 when its Fortnum Gold operations were acquired by Westgold, and subsequently appointed as the Executive Director in 2016. Debbie joined Westgold as CFO in May 2018 and then took on the role of Chief Executive Officer in July 2020 to steer the company through the final stage of its evolution of one of Australia's largest owner-miner gold producers. Welcome, Debbie.
Thank you. Good morning, all. Firstly, let me congratulate diggers and dealers on their 30th session and recognise it as one of the most sought-after conferences in the industry. I'd also like to thank major sponsor Canaccord for its commitment to the conference and congratulate them on the performance in the equity capital markets. I'd also like to acknowledge the other presenters and delegates that go to make diggers and dealers a success. This is my first time on the podium at Diggers, but my name's not Peter. I am, however, proud to be representing women in mining as the CEO of a major Australian gold company. Talking about Peter, or Cookie as he's affectionately known in the industry, he has attended every single Diggers conference. And last year, when he called time after a quarter of a century presenting, we all thought, or at least I did, that he was joking. However, true to his word, here I stand. And Paul, I believe you down a carton of Stella. I did ask Peter for some pointers, and he just sent me this. Let's pause to honour a true mining master. However, I do question the footy team he has me playing in. It's amazing just how attached people can get to their jobs. But the saying goes, if you can't move them out, move them up. So Peter is now our non-executive chairman, and what a great role for him. I've worked closely with him for the last 3 years, and I can tell you that he has forgotten more about this industry than most will ever learn. Now we know that Cookie is the shy retiring type, which was very evident to those who attended the Canaccord show last night. One does wonder how the front of the Smoking Guns band, a true rock star, became a mining entrepreneur. You will, however, be relieved to know that this is the end of the banter. Let me tell you about Westgold. We stand today with an enviable future, regional dominance, rich infrastructure, debt-free, and excellent mine life, with a progressive replacement of reserves from known resources. Significant exploration upside which exists in our vast tenure. We live with an ever-increasing focus on ESG, and with a big focus on the S, we find ourselves with nearly 1,000 employees, and with a gold sector multiplier of 7 to 8 times, that makes us responsible for the prosperity of over 7,000 people. We are a substantial contributor to the fabric of our local and regional communities, as well as the state and society in general. I'd like to introduce the team with a couple of new faces, as well as some changed roles. As Peter takes up his non-executive chairman role, one would expect him to have a lot more time on his hands to pursue the dealing, whilst hopefully leaving the rest of us to do the digging. Wayne's move to Executive Director will see him embrace the outward-facing aspects of our business. I might add that you could expect to see a lot more formality when he fills that space. Sorry. Whilst I appreciate the support of Fiona and Peter as our long-serving non-execs, I do welcome the addition of Gary with his vast mining engineering experience. I also would like to acknowledge Anthony as my right-hand man. I rely on his technical knowledge across every inch of our operations and look forward to him delivering the production outcomes that our shareholders are so eagerly expecting. I would also like to welcome Tommy, who started with Westgold yesterday as our CFO. And last but not least, I would like to thank Lisa, our co-sec, for her tireless support. Let's start with a quick debrief on the long and winding road that took us to where we are today. Westgold was born out of Metals X in a deliberate move to build a gold division counter-cyclical to the gold investment market. Westgold delisted from Metals X in December 2016 and began trading as a separate entity. The company rapidly built capacity with 6 major acquisitions over the next 5 years. There were a number of minor ones too. As we matured as a gold miner, the board moved in early 2000 to simplify the story and focus on our core assets by pinning our flag on the Murchison. We focused our expansion on the 3 mining and processing hubs to become fully owner-operator in our mining. We also began divesting our non-core assets. So that's where the journey gets us today, a regionally dominant miner created and funded mainly from its own cash flow, one with no debt, developed on engineering and technical aspirations, not market desires, 3 operating plants with approximately 4 million tonnes per annum capacity, 7 underground mines, so far 10 open pits with many more still to come, substantial regional infrastructure, including 4 villages and a substantial amount of mining fleet. All of this underwritten by a large gold resource base of 8.5 million ounces and a current reserve base of 2.5 million ounces. Indeed, a very busy time at Westgold, and as we look in the rearview mirror, we can reflect on that journey, and I'll summarize a few key milestones. Becoming independent and listing as a separate gold miner on the ASX, as a large domestic gold producer, we are coming up to our 5th birthday. The fearless commitment and drive of our board and management, in particular our chairman, Peter Cook, has seen us invest around $6 million in capital for our Central Murchison projects over the last 5 years. More impressively, and I should say distinctively, with only 100 mil of that coming from traditional market placements. The remainder from the digging and dealing of the assets within the group. While still ramping and within the 4 years of listing, we produced our first 1 million ounces under the Westgold banner in October 2020. With the same fearless approach, and unlike any other gold miner, we have taken control of our destiny by becoming Australia's owner-operator for all our underground and open-pit mining. Where are we today? We boast a substantial footprint with plenty of resources and reserves, a long life, no debt, and cash in the bank, set to generate wealth. It's really quite a simple story built around a concept of regional dominance. We started with the aggregation of the region. By that, we refer to it as controlling all the pieces on the jigsaw. Each piece is a significant historic gold mining centre. The Murchison, a more mature region, is one of the prolific greenstone belts in the northwest of the Yilgarn Craton, hosting our CGO and MGO operations. Our Fortnum operations are hosted in the younger Briar Basin. The Briar Basin is better known for its copper with horseshoe lights and sandfire, but there's plenty of gold up there as well. We added 3 plants, one in the north, one in the middle, and one in the south. We established long-term mining plans for each of these processing hubs, initially an 8 to 10 year. We added to the infrastructure to make us self-sufficient. 4 villages, an internal mining services division that enables us to do all our open pit and underground mining. And most importantly, the inherent practical and contractual flexibility to allow us to move and shuffle these pieces around as we please. Sounds pretty easy on paper. 4 years on, the first 1 million ounce pin has fallen, and we are well on our way to the second. Let's have a quick look around the grounds. Starting in the north, we have our Fortnum Gold operation. This comprises the historic mining centres of Labouchere, Fortnum, and Peak Hill. Recommissioning the Fortnum airstrip has provided the means of flying our workforce directly from Perth. This self-contained smaller operation is proving to be very cost-effective. And whilst our focus is currently on the Starlight underground mine, there are a raft of open pits waiting in the wings. Moving down to Meekatharra, there's a hive of activity as we actively mine 3 underground mines. This region covers the mining centres of Meekatharra North, Yalaginda, Nanine, Reedies, and Paddy's Flat. Here we operate our largest plant and house some 350 people to service this part of the region. There is significant upside in these operations, and I'll provide further details of our latest developments in some of the slides that follow. But finally, in the south, you'll find our Q operations, where activities have heightened. Hosting the mining centres of Big Bell, Kadiwarra, Day Dawn, Pinnacles, and Takabiana. We currently run 2 underground mines here, Big Bell and Comet. Also, open pit mining is conducted at the Kadiwarra North Mining Centre. But again, this portfolio has many more mines on hand to draw from. Fender, 1600 Shocker, the Great Fingal Golden Ground Complex, and Corstons. What does it mean to have an internal mining services division? Well, there's a lower unit cost, which has us removing the contractor margin. We have flexibility to change and vary our scope of works without penalty. And we have the fleet and the gear to handle our expansions. Our historical gold production in the Murchison region portrays an increasing trend. You can see that we have firmly pinned our flag in this region. Last year was a little under our expectations, but I think we are all aware of the range of challenges the industry faced. We have been able to exercise financial discipline and maintain consistent unit costs. As a largely 80% fixed cost business, We as a group essentially spend the same amount of money every month, and the biggest driver to our unit cost is output. We are largely able to benefit from the ability to increase production without an associated increase in costs. And of course, on the fiscal side of things, it has been, and we expect to remain, the beneficiary of those higher gold prices. With our all-in sustaining costs relatively steady and the gold price rising, our all-in sustaining margin, and therefore the profit, will continue to rise. Our fiscal strength is portrayed in our balance sheet, and when we view this against the backdrop of the previous year, we find improvements all around. We really have a great balance sheet for a group that's about to enter into a 10-year forward-year mining plan. Cash is growing. We have lots of infrastructure and hard assets, which we carry only at 175 million, comprising the 3 plants, the 4 villages, and lots of underground and open mining fleet. Our capitalised mine development shows the size of our investment in our future. Even our exploration and evaluation at 90 million reflects only approximately a cost of $15 an ounce of carrying value on the average resources we have not yet in reserves. So there's plenty of new developments, and it will fill me with confidence as I show you a few. Firstly, let me take you to the Reedy's Mining Centre, where the past and current endowment is more than 1.5 million ounces. In the southern end of the Reedy's line of lode, we are mining the South Emu mine and have been producing around 300,000 tonnes per annum for the last 2 years. This figure depicts a schematic projection across the South Emu Triton mines. South Emu and its decline is depicted to the left, and that mining continues to follow the ore system down plunge. This year, we established a second portal heading to the north to access the Triton North lodes. Independent ventilation and escape ways have been established to commence stope production from Triton North. The key focus here, however, is the Triton mine itself, which produced 228,000 ounces at just under 10 grams a tonne from a shaft before closing in the 1940s. We have drilled down plunge of this with excellent results and will progressively mine the remnants within the Triton North lodes. However, this picture is getting bigger as we extend our focus across the 2 kilometres of strike. We bring in the Rand and Rand North open pits, which were also mined in the 90s. The historic drilling and new drilling we have completed shows that the high-grade ore shoots continue at depth, plunging south, which opens up good potential for the mine to get larger and potentially produce a lot more. We will be progressing this strategy over the ensuing year. Let me take you to Yalaginda on the doorstep of the Bluebird Mill. The Yalaginda Mining Centre also has good endowment with past and current estimates aggregating more than 2 million ounces. We have Paddy's Flat producing steadily at 700,000 tonnes per annum, and it has done this for the past 4 years. This year, Paddy's Flat will move into virgin ground with some high-grade shoots forming part of our mine plan. 1 kilometre south of the plant, we have kicked off the Bluebird Mine, which we have recently restarted The figure depicts a schematic projection of the line of lode also across a 2-kilometre length. This is a shallow mine accessed via a portal from the neighbouring South Junction pit. The decline runs below the old workings and the Bluebird pit to access new virgin lodes. There is a number of deeper opportunities with future drilling programs assisting to evaluate these extensions, and I refer you to our announcement on the 7th of July for more detail. Now let's take you to CGO and provide an update on what has been our single largest mine development with the re-establishment of the sub-level cave mine at Big Bell. The picture on the slide shows the two Big Bell portals at the bottom of the Big Bell pit, and indeed the hanging wall cave-in, which is occurring this week as we speak. Here's an update to the long section of Big Bell, also showing the large amount of development completed in front of the cave. After a slow start, you can see we have now established our planned chevron V front, which finally enables us to progress our cave fronts in line with our ground stress management plans. Big Bell continues to ramp. The ramp is much easier now with more than 10 production fronts open at any one time. We expect to produce more than 900,000 tonnes in the current year, and its long-term plan is underway. Our focus has now turned to the overall mineralising system in this prolific 4-kilometre line of lode. You will see that Big Bell is not the only mine in that area. With minimal shallow drilling, we have already identified these additional resources with mine-ready plans. Looking across the strike, we find Fender and 1600 Shocker, which extend the portfolio. Fender drilling shows that these systems extend, but there's plenty more upside. The deeper drilling and development focus on Big Bell stands out like a beacon here. However, there have been some significant other ore shot mined along the shear. After mining the cutback at Fender, we embarked on the further drilling to approximately a depth of 400 metres. And I found that it stacks up to be a mine in its own right. Our review of the 1600 and Shocker lodes also show present as potential for independent mining options. So the big picture here begins to unravel. Big Bell, its resurrection, has been such a monumental task for the group that it will be a prolific producer for a long time. However, this plan shows the big picture that it is more than just Big Bell. Oh dear. What's happened? Apologies. And of course, let's not forget possibly the nicest and richest projects in our tenure, the Great Fingal and Golden Crown systems. These have been deferred in our strategy due to the depth that they had previously been mined to. That said, they were mined to such depths because they were so good. This section cuts through both mines and shows both older shaft mines. Great Fingal closed in 1914 at the onset of the Great War. It produced 1.2 million ounces from a 250-metre-long ore shot at a grade of just under 20 grams per tonne. We have drilled the obvious down-plunge extension, just enough to build a JORC resource to justify development. Same at Golden Crown, which produced just under 300,000 ounces from a more modern shaft before closing in the late 90s. Last year, we actually established the decline and mined 50 metres vertical of the system exploiting the low-grade footwall stockwork ore, and that decline phase sits at the ready for the development to continue. This is really exciting for the group, with the real question being, where will we fit all the ore in? After 4 solid years of focus on resurrection and rebuilds and restarts, we are now generating strong cash flow and moving our eye to growth. We hold a massive land package, somewhat neglected of greenfields exploration due to our other priorities. We have now built a specialist team and started to focus on this area, with our supportive board really upping the ante with funding commitments for us to find more virgin ore in our ground and hopefully another major mine. This plan shows our regional footprint with a 100-kilometre radius around the plants. Oh, sorry, back. And if you're in one of these circles in our site, you are in our sites. However, we are playing the long game, yeah, and our plants are currently full for the next 10 years. When the circles are extended, you'll find yourself in an easy tracking distance, and our long-term plan becomes obvious. So this is the Westgold story. It gives you an investment proposition of deliberate, self-sufficient, asset-rich, and a focused company built within its own means with long and stable output. Our margins are expanding, our costs are steady, and we're in very strong financial health. We are embarking on a new phase of growth and are determined to create more shareholder wealth. And that's just our published mineral reserve and resource statements. And with the compliance statement, I thank you for your attention. Please feel free to drop by our booth and enjoy the rest of the conference. Thank you.
Great presentation, Debbie. Do we have a question from the audience at all? If not, I've just got one little one I can ask here.
Yes.
I'm just thinking, with such a great balance sheet, what's your attitude to hedging all your gold positions?
We only hedge prudently and make sure that we cover our capital commitments, and we like to utilise the upside of the gold price to produce more revenue. Thank you.
Thank you for presenting today, Debbie.